Good morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Wednesday, June 18th. Quiet trade overnight, start to firm up as we get closer to the pause. Wheat is the upside leader, currently 4 to 6 higher. Corn prices have flipped from 1 to 2 lower, now 1 to 2 higher. Same with the beans. Meal is steady to a little lower, while oil prices have rebounded another 40 points. Normal limits today for the soy complex. After surging here in recent days, crush margins did take a bit of a breather yesterday, backing off 4 cents on old crop to $1.56. A couple cents lower on new crop as well to $1.98. Despite the pullback, margins are up nearly 40 cents from the recent lows as the market works to rebuild bean oil stocks for biofuel production. Market also awaits clarity from the EPA and the Trump administration on these small refinery exemptions. Today's also Fed Day as the FOMC concludes their 2-day meeting. No change is expected. However, markets will be sensitive to comments from Fed Chair Powell for hints on future rate cuts. U.S. dollar is just slightly lower, giving back a portion of yesterday's gains. Later this morning, we'll also get EIA report on the weekly ethanol production. Expectations are for a bit of a pullback from last week's record, 329 million gallons. Right now, I see no change in the current USDA corn usage forecast at 5.5 billion bushels, which it's been now since December of last year. Export sales delayed until Friday due to Juneteenth holiday tomorrow. CFTC Commitment of Traders report, usually out on Friday, will be pushed back until Monday. Weather-wise, several scattered showers across much of the nation's midsection today, including here in northern Illinois. Past 24 hours showed heavy rains across eastern parts of Kansas and northern Oklahoma, which will only continue to slow harvest efforts here. And I think a big factor in the higher wheat trade overnight. We do have heat building across the western Corn Belt and southern plains this weekend. 100-degree temperatures expected to push as far north as South Dakota for at least a couple days before temperatures cool by early next week. As this high pressure ridge slides off to the east, it will bring temperatures into the mid-90s across much of the central and eastern Corn Belt over the weekend and before moderating late next week. Extended forecasts do show much above normal temperatures in the east, normal to below normal in the west, with normal to above normal precipitation across much of the continental U.S. into late June. Inside trade for July corn overnight, while December traded back above that 440 level. Spreads have weakened on declining basis at the Gulf yesterday. Global demand is gradually shifting to South American origin as Brazilian crop prospects continue to grow. The fund's short position now, we've got that back out to about 190,000 contracts. I think favorable weather will work to cap rallies for now and eventually open the door for D's to trade below its contract low at 428. Inside trade for July beans, new 4.5-month high for November beans as the market looks to challenge its February high at 1076. Prices are working to encourage farmers to get these last 5+ million acres planted with key insurance dates later this week. In the products, meal is just hovering near recent lows, with oil now back challenging its recent highs. Key resistance for Chicago July wheats at 560. Kansas City shot up to its highest level now in nearly 2 months. 100-day moving average resistance there, not until 570. Minneapolis July, that shot out to a 3-month high with next resistance there at 640. Algeria's recent purchase of 550 to 570,000 tons of milling wheat, likely to be sourced from the Black Sea region. Thanks for listening, everyone, and have a great day.